You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. What's going to make it on the show this week? Energy, metals, rates, equities, all the above, ags, fluid milk. You never know. You got to tune in every week. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from the ever-scintillating, at least we think so, Options Insider Radio Network. Of course, the legion of ways for you guys to get access to the content on demand, just about every platform under the sun. If you want to up your game to the next level, you want to join the show live, ask questions of all the hosts in real time, theoptionsinsider.com/plus is the place to go for that. Of course, if you want to go above and beyond, get exclusive shows, including our great pro Q&As, had a great one in the crypto space this week, as well as, of course, Options Oddities, talking about all the unusual activity from the week, then theoptionsinsider.com/pro is the place to go. However you listen live after the fact, make sure you hit us up, those questions, those comments, those insights, those pearls of wisdom. We do love to hear from all of you folks out there. Let's see who we're hearing from on the show today, doing double duty, holding down both the CME and the FTSE Russell hot seats. He's a very busy guy today. Mr. Tim McCourt, the managing director and global head of equity products over there at CME. Tim, welcome back to TWIFO, sir.
Hey, Mark. Thanks for having me. Always fun to be here.
And you know, it's time for your regular appearance. That means you must have some cool stuff up your sleeve to share with us this week, sir. I like when you come on because that means there's always new products to talk about. But before we get there, listeners, we have to kick things off the way we always do. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show we break down everything moving to the light side, aka the upside, and to the dark side over there at CME this week. And Tim, you always have good timing when you come on, because it always seems to coincide well with at least a few of your products making appearances on our Movers and Shakers list. So, Tim, where should we begin our journey this week, sir? To the light side or to the dark side?
Always a good question. Let's go with the dark side first.
Oh, you surprised me. I thought you were going to go light side for sure. So let's see what we got in store for the dark side. By the way, listeners, if you want to see this report for yourselves, the folks over there at CME tweet it out usually right before showtime. So give them a follow if you aren't already over there at CME Group. We will, of course, retweet it. So if you follow us, you can see it there as well. And it's a mostly biased towards the upside kind of week. Looks about 2/3 green and about 1/3 red. Of course, when you're talking about the magnitude of the move in terms of percentage moves, the top mover to the upside is the big dog. We will get to that in a minute. First, let's go to the dark side as requested. Number 5 to the dark side this week is our old friend Lean Hogs, off not quite 2%, 1.97%. It was number 4 in the other direction last week, up nearly 8.5%. So a wild couple of weeks out there for Lean Hogs. Number 4, soybean meal, also off not quite 2%, 1.99% over there for number 4. Number 3, palladium, off 2.58% this week. It was number 1 to the dark side last week, off 6%. And again, before you get all fired up, it's only about 400 contracts on the tape out there. So not a ton to sink our teeth into out there. Number 2 is the Nikkei, the yen-denominated flavor out there, off 4.2% out there. And number 1 to the dark side this week is Nat Gas, taking a break this week, off 5.2%. It was number 2 in the other direction last week, up nearly 14%, 13.75%. So again, you don't need me to tell you here on the show. It's been a wild month for Nat Gas out there, and that wildness continues. Number 5 to the upside now, going in the other direction. Got some more energy. It's kind of been a topsy-turvy week for energy out there. WTI, number 5, up 3.65%. since our last show. So a good week for WTI. Number 4 is Brent, up 3.7% since our program concluded last week. Number 3, heating oil, getting a bit of a trend here to the upside, up 3.95%. Again, Brent and heating oil, not huge on the option spectrum, so probably not going to have those on the radar. Number 2 is oats, another frequent offender of late, and also, again, not a huge option story there, but it's up 4.25% this week. And then number 1 with a pretty huge bullet, Tim, one you're probably pretty familiar with. Yeah, the old BTC, Bitcoin, up 25.2% this week. Last week, it was number 6 in the other direction, not even in the bottom 5, off nearly 3%. Man, what a week that is, that has been, I should say, out there in Bitcoin. Tim, are you familiar with that product at all? Bitcoin, have you heard of it?
Perhaps a little bit familiar, you know?
A little bit familiar. Well, we'll get to that in a second, but I know you got some products burning up your sleeves there. Let's get to those first. It is time to dive into the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. Welcome to the equities. You guys know where to find these reports for the equities and everything else we're going to talk about on the show today. CMEGroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those should work. Both of those should take you to our reports out there. If you want to find the equities, just go to the drop down, scroll on down on the left column under asset class to equity indices, and then you can go from there, top there, U.S. Index E-mini. We're going to hang out in the Russell 2000 first. Before we do that, let's break down the volatility landscape that's coming into today's show. You can't talk equities without talking volatility. And there's a lot going on out there in the world of vol. Of course, we saw the debt ceiling punted down the road a little bit to December earlier this week. That was causing a lot of vol in the broad equity space. Now with those concerns, at least for the near term, seemingly pushed down the road a little bit, we're seeing vol coming back in pretty hard. A lot of that coming today. RVX coming into the start of the show. Remember, RVX, of course, the VIX of the Russell 2000, right around 24.5. That puts it down about 3 1/3 points from where it was this time last week. VIX cash coming into showtime, shy of the 20 handle, right about 19.15 or so. Puts it down a little over 4, about 4.15 from where it was this time last week. VVIX, the volatility of volatility, also coming in. It's down to about 106. That's down about 12 points from where it was this time last week. And VolQ, aka the at-the-money vol of the NASDAQ 100, aka the newest tradable vol product over there in the land of CME. Right around a 19 3/4. That puts it down about almost exactly 3 points from where it was this time last week. So that puts that VIX to RVX spread, so the small cap to large cap vol spread, at about 5 1/3. It's about a little more than 3/4 of a point wider than it was this time last week. Obviously, because we had VIX outpacing RVX to the downside a little bit this week. And then, of course, the VIX to vol Q, so the S&P 500 to NASDAQ vol spread, a little bit more than half a point, about 0.6 of a point. That's pretty much unched from where it was this time last week. So the table is set, Tim. Let's get into the world of all things equities. And like I said, I like having you on the show, Tim, because that means I usually have more stuff to talk about. So what gifts are you bearing for us on the show this week, sir?
Yeah, so it's an exciting week here at CME. Happy to do double duty in the CME and FTSE Russell hot seat this week, because this past Monday we launched Monday and Wednesday weekly options on the Russell, the E-mini Russell 2000 futures, and it's been great to see. They're trading well received by the marketplace, and I don't have to tell you, Mark, or your listeners, there's certainly been a trend in the options market, and we've seen it in the options on futures market. Short-dated expiries are gaining in popularity. They're gaining in utility with respect to more precisely managing risk, or as well as just being more discerning with, where do you want to trade, or where do you want to deploy your trading strategies. So the addition of Mondays and Wednesdays to Russell 2000 is super exciting. When we look at the Russell 2000 in general this year in equities, that continues to be, as we say over here at CME this year, the theme of 2021 is index choice matters. We have a lot of divergence between the small cap and the large cap universe. Mark, you're just talking about some of the volatility parameters, but even that's certainly manifested even in the futures. When we look at the Russell 2000 E-mini futures, they're relatively flat from a volume perspective for 2021, kind of outpacing its other equity E-mini future siblings here at CME. But if we look at the Russell complex as a whole, just the month of September was up, almost 45% in volume in the month of September versus the month of August. So the Russell continues to be gaining momentum, and the options volume has almost doubled. The options on futures volume has almost doubled to 6,300 so far this year. So the advent and the addition of the Mondays and Wednesdays for Russell 2000, I think honestly couldn't come at a better time for the marketplace and for all the listeners out there.
Well, we certainly have seen a lot of interest from our audience asking about, all things Russell 2000. They kind of got swept up in the meme frenzy, it seemed like, earlier this year, and people were loading up on those just like they were a lot of the other crazy meme names out there. Is that kind of what you heard over there at CME as well, Tim? Or a lot of clients coming to you saying, hey, they want more Russell options in particular to trade? Is that why you launched these? Or was this always part of the plan to steadily roll out and increase the days around this time frame?
That's a really good question. I think what's interesting is some of the dynamics we're seeing here in the kind of continued work from home environment, the meme stocks, that certainly favors some of the things we see in the NASDAQ complex. I think because of where those stocks are listed, the NASDAQ itself is a very retail focused product. It's been a very popular trade the last few years, even going back as far as 2017, we really started to see that trading volume accelerate in the NASDAQ. We also introduced the NASDAQ Monday and Wednesday weekly options earlier this year. So certainly a theme to kind of round out those offerings. And they're doing pretty well too, where their ADV in September was just about 7,000 contracts for the Mondays and Wednesdays. So off to a really nice start. NASDAQ options on futures are up about 85% in terms of volume versus last year at over 30,000 options per day. This year. So if you're not trading NASDAQ options on futures, now is certainly the time to get involved. And I think that's what really gave the market the appetite and the wanting for Russell. We've had the Monday, Wednesday, Friday options on the S&P 500, the E-mini S&P 500 for a long time now. That's always done really well. People are starting to look at the NASDAQ in a similar way they are the S&P, and then same thing for Russell. Strategies that work and benefits of options that work in one of the major equity indices work in the other indices, but they're fundamentally different. They have different volatility profiles. They have different price performance. So these are all, I think what's so exciting about this time and why that index choice matters is you're familiar with how all these things work, and now you can just trade them on more indices and you can trade them against each other, and they give you just very different exposures. And I think the Russell 2000 is going to be continue to be an index to watch here as we kind of come into the Q4 here of 2021, just because it is so much more centric to the U.S. economy. The U.S. small cap space is always a very unique compared to the large cap multinational names you find in the NASDAQ and the S&P and the Dow. So I think it's going to be a lot of fun to see how these things are adopted. And I think I encourage people to give them all a try. Mondays, Wednesdays, Fridays, quarterlies. Pick your expiration and pick what works for you.
Trade them up out there. Let's see what you folks are trading up out there right now in all things Russell 2000. By the way, coming into showtime, we got the Russell 2000 a little bit north of 22.5, about 22.54. That puts it up a little over 0.75% just since Monday. Obviously, when we do our movers and shakers, that's actually all the way back to the end of our show last week. So that's a full week there. But just since Monday, it's up over 0.75%, actually about 0.85%. So a good little run. Again, a lot of that coming just on the heels of today's rally out there. And also decent paper, again, lighting up out there this week. We're closing in on 25,000 contracts out there right now in the Russell 2000 options. And, it's been a couple of themes as we've been breaking this down out here week after week. It's been a couple of themes to the paper flow. Earlier in the year, it was definitely those, as Matt has mentioned on the show in the past, the small delta calls. That's where a lot of the action was. And there also has this kind of been this persistent flow on pretty far out of the money puts. And we're seeing that again, actually, this week. The number one trade out there this week is in the week 3 November 16.5. This is a strike that we've seen come on the radar a few times on the show of late, and it is trading yet again. So someone is afoot and on fire out there on a 16.5 puts for the number one most active contract, trading pretty much steadily all week except today. And every one of those days it's been closing. So it looks like some folks getting the heck out of Dodge on the 16.5 puts there in the week 3 in November out there, which is interesting. Again, not the strike I would have expected, but I've learned to expect the unexpected when I'm talking about a Russell 2000 options out there. And it seems like whoever was putting those on, I think there was a bit of a roll going on last week's show, as I recall, where it sounds like whoever was putting those on is now getting the heck out of Dodge. A little bit nearer to home. Again, it's hard to parse the equities sometimes because so much of the flow, and that is the case again this week, nearly 40% of the flow going up in the contract that's going out one day. And of those, the 2,200 calls that are now about 50 handles in the money, those are the number one contract. That's just a number 2 overall contract out there this week. Let's go a little bit farther out. Let's go to, again, where we just talked about, the week 3 November. It has 43 days to go. If you're wondering what the vol is in this week 3 November contract that did about 15% of the overall paper this week, it's a 22, listeners, off about 2.25. Skew-wise, the puts last week were 17.2% rich. This week, 18.75. So puts getting a little bit more bid after we have seen skew come in a little bit over the course of this week. Now those puts getting a little bit bid again. The calls last week, 12.9% cheap. This week, 15.5% cheap. So puts getting more expensive, comparatively at least, and calls getting a little bit more offered. Interesting stuff. Tim, we can probably talk Russell for the rest of the show here, but I know you have some other things going on in the world of equities. In fact, the last time you were on was just a month ago, and you were talking about the micro futures and options. Those have already surpassed 1 billion contracts now. So a lot going on out there. What else is lighting up the world of equities and equity options out there at CME, sir?
Yeah, certainly we're still super pleased and ecstatic about the performance of all the micro contracts at CME. We did surpass that 1 billion contracts traded, and that's across all of them, including our micro FX, our micro gold and silver contracts, as well as micro E-minis. And, the recent additions, micro Bitcoin, micro crude, and micro treasury. So it's a great milestone for the complex. A lot of that is driven by the micro E-minis. So equities continues to be a very important part of that segment. The micro E-mini contracts continue to be performing well and really serve the needs of customers, giving them that more precise size risk, a more manageable trading position to scale up or down. We have the micro options on S&P and NASDAQ, which are also doing well. So it's just an exciting time when you think about all the possibilities out there. They can now trade micro crude, which is a financially settled contract. They could trade the micro treasury, which is quoted in yield, so it matches the kind of vocabulary and vernacular they see in the marketplace, where it's $10 a basis point. I think that's going to become important for folks. as we continue to watch the interest rate environment for the next few months here. So lots of great stuff. And then, we're still doing well on other fronts. We continue to be pushing ESG. That's a hot topic in the space on the S&P 500. And also we have a European version on the S&P Europe 350. So just really, really pleased with how things are going. But Mark, one of the things I was excited to see, I'm sure as the listeners were, I think if we look at 2021, we had seen, a slowdown a little bit in the velocity of the S&P 500 options market, not just, I think, in the options on futures, but kind of across the board in the S&P related products. And that certainly changed in the month of September. A few million contract or million plus contract days on the E-mini S&P options on futures, up over 52% versus the month of August. Doing almost a million contracts, between 900,000 and a million contracts per day for the month of September versus the year-to-date average of about 650. So I think that was great to see. I think the market's been doing its thing, but I felt like the vol components were a bit sleepy on the equity side with respect to velocity and volumes. But hoping that kind of continues here in the month of October. And just remind people, options on futures are a great way to get involved and a great way to kind of manage their risk, particularly because it delivers the E-mini future itself, which is also immensely liquid, especially when looking at these weeklies and these monthlies. You don't have to replace your delta. You can just trade options on futures at CME and you'll take or make delivery of that future. So it's a great mechanism. And, really excited to see what the last few months of the year has. But I was really excited to see that pop in volume and that pop in trading on the S&P options. Otherwise, bit of a bore the last few months pre-September. So glad to see some of that velocity return to the market.
Well, speaking of things returning and indeed coming to the market, one of your recent appearances on the show, you kind of announced the launch of the micro options out there. You kind of just touched on how they're putting up some numbers. So since you're on the show with us, Tim, today, let's do a second stop in the equities as well. Let's go on out to the micros. You don't have a chance to really parse those a lot, but they're doing a lot of paper out there as well. Let's look at the E-mini S&P micro right now, listeners. You can go find that in that same drop down out there. Just go to the U.S. index. We were in E-mini before. Now we're going micro, and you'll see that over there in the S&P 500. Over 41,000 contracts on the tape already. So no small amount of volume hitting the tape out there on the micros as well in the E-mini S&P. And in terms of action, it's like any other equity index option, listeners. All the paper is in the contract going away in one day. That's just the thing in equities. You have to come to grips with that. In this case, it's about 36% of the contracts out there in that weekly going out tomorrow. Let's go a little bit farther down, obviously, see if we can sink our teeth into something with a little bit more time to go. About 14% of the paper went up in the monthly October contract that still has about 22 days to go. So let's hang out there. By the way, S&P coming into showtime just a tick under 4,400, 43.99 right now, having a nice little lift up a little over 1.25% on the week. Again, a lot of that on the heels of today's rally. In terms of the vol out there in the out contract, it's about 1560, a little over 2 points, about 2.2 points out there. Skew-wise, the puts are bid, and they pretty much still are. They were 30% rich this time last week, 29% coming into showtime. We've been talking on a lot of our shows, listeners, lately, including our Volatility Views show last week. Had a great discussion about skew and how challenging it is in this environment to come in and buy a put that is 30% bid to the at-the-money vol and still make money on that trade, even in a down market. It's a very challenging trade. So if you have questions about equity hedging and skew and how all that performs in various markets, check out our most recent episode of Volatility Views. It was a good one, if I do say so myself. To the upside, the calls, 18% cheap last week, this week even cheaper, 22% cheap. And in terms of the most active contract out there in the E-mini micro S&P contract this week, it's the 4220 puts. That's going out tomorrow. Remember I said we're at a 43.99 right now. And the 4220 puts did quite a bit of paper out there this week, including a big block, about 1,500 going up yesterday. The rest kind of scattered throughout the week. Most of that opening. So someone opening for size on the 4220 puts out there in the E-mini micros, given what we've seen from a lot of other order flow out there in the world of equity options, I'm going to go out on a limb and guess that was probably somebody premium harvesting. Don't see a ton of last minute buys, but then again, we have a listener question about that a little bit later. Maybe we'll come back to that, but I'm going to go out on a limb and say, someone probably premium harvesting and they're probably smiling right now if that is indeed the case. But you know what, Tim, you're also smiling. You kind of have purview over a couple of the hot sectors over there in the land of CME, including our number one mover and shaker this week, Bitcoin. So let's head on out to crypto next.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, listeners, you heard the man. It is time to talk about all things crypto. So, Tim, when you're not busy launching micros and everything else over there and new weeklies in the land of equities, you get to put on your crypto hat. Obviously, a little bit of paper sneaking in, also a little bit of price action this week. We saw Bitcoin, again, our number one mover and shaker to the upside this week. It's been a little while since we've seen Bitcoin topping our list. We were kind of languishing in the low 40,000s last week. This week, coming into showtime, 54,540 out there in the big Bitcoin handle out there, listeners. So a big move this week. Mr. Tim, what's been lighting up your tape and the tapes of the team out there in Bitcoin and crypto this week, sir?
Yeah, certainly an interesting week, with the movement to the upside, certainly, rewarding all those diamond hands out there holding on, and it continues to be, discovering a price in the futures market. It's been exciting to see and exciting to watch how it's grown, because when we look at Bitcoin futures, we're actually hard to believe almost coming up on the 4th anniversary of Bitcoin futures.
It doesn't seem possible.
I know,
but you're right. It was December 2017. It just seems like it was like maybe a year.
I know. And right now we're year to date this year of over 10,000 contracts in the big Bitcoin futures, BTC. And then when we look at the micro Bitcoin futures, they have about 21,000 contracts of ADV. And those are both up pretty significantly in terms of the trajectory of growth. The OG, the 5X BTC contract, is up about 14% in terms of volume versus 2020. And we're continuing to see micro Bitcoin putting up stronger OI, stronger volume, a number of large traders holding that position is at 88. The record was back just about a month ago, 120 large traders as per the CFTC report in the micro Bitcoin futures. So it's been a lot of fun to watch. It's something that I think really differentiates CME as the regulated futures exchange offering the cryptocurrency futures. And it's not just Bitcoin. Ether continues to be growing at CME. Hard to believe we only launched that back in February, about 8 months ago. And that is having an average daily volume of the year for about 3,500 contracts, but it's kind of growing month over month. So when we look at Ether, just for the month of September, over 6,200 contracts trading per day. So kind of almost doubling the year-to-date average. So that's a great trend we'd like to see. OI is growing, with OI in Q3 on average of just under 4,000 Ether futures contracts. So it's really been great to see. I'm excited to see how these contracts grow from here, and just continue to offer regulated products for all market participants out there who want to access the cryptocurrency markets or hedge their digital holdings. If you're long some of the underlying Bitcoin, the spot Bitcoin, micro Bitcoin, or BTC are great ways to hedge against some of these undulations we're seeing without having to get rid of the digital asset. So I think we're really starting to see some use case and I would say some more sophisticated trading relationships form between the cash market and futures, where we also recently introduced BTIC on Bitcoin and Ether futures at CME back on September 27th, which that now will allow market participants to trade the basis between the spot market tied to the Bitcoin reference rate, the BRR, or the Ether US dollar reference rate, and the futures at CME. That's a mechanism we've had in the equity index market now for several years. So really excited about combining that innovation from the equity markets onto something so innovative as Bitcoin and Ether futures at CME. And allows people to kind of get that cash market observation, that daily reference rate, while enjoying all the benefits of the futures. It's been a great introduction to the exchange, and all things crypto are going well at CME.
Tim, we watch this a lot, not just on this show, but also on our Crypto Rundown program. We tend to have a barometer around the big Bitcoin options of around, like, you get 100 contracts in a day. That's a pretty active day. And you have been hitting that milestone a lot more frequently over there at CME, even in the last couple of weeks where there really wasn't a huge amount of activity in the underlying outside of a couple of days. You were still seeing decent activity on the Bitcoin options. Ironically enough, we're not seeing a ton this week, even though we are seeing a lot of price action. So it is almost weirdly uncorrelated out there. But especially in those last few weeks out there leading into this big move, what do you attribute that little bit of resurgence out there in the options? Is it just the growing ADV in the future starting to accrete more into the options? Are you starting to hear from new customers that they're coming in and using this at these price levels? What is it that's driving a little bit of that uptick over there in the options?
Yeah, so that's a great question. I think there's a few things. I think one is certainly continued customer adoption. We have continued inquiries into trading options on futures in Bitcoin at CME. And I think some of this is people are getting more comfortable with the options. They're trading futures and, for lack of a better word, kind of graduating and moving into trading the options. That's kind of a life cycle we see across the exchange. So not necessarily a unique phenom to Bitcoin. But I think what's also interesting is when you look at some of these price moves and think about the benefits that options provide, either as downside protection or an opportunistic way to trade the upside. I think there's nothing like a little sell-off sometimes to get option volumes going. And I think some of that was, we have some technical behaviors, I think, also presenting themselves in the options in Bitcoin, both at CME and other parts of the ecosystem. So I think some of that is, people wanting to hedge against potential further downside moves, or as the price was depressed, play the upside. And I think that's what we're seeing, and that's where options are uniquely more useful than futures in deploying some of those protective and upside strategies, rather than just participating in the one-for-one price move that you would in the future. So I think that complementary aspect of options on futures, literally on top of the futures at CME as the underlying, is really starting to resonate with people, and we're super excited about continuing to grow the options on Bitcoin futures at CME.
Let's talk about those options a little bit here coming into showtime. If you are wondering, at about a 54,540, the vol out there, listeners, right around an 87.5 in the most active contract, which is the DEIS. It's kind of a tie between the DEIS and the October out there. And if you're wondering, talk about the crypto rundown, talk a lot of interest in the, let's say, very optimistic 100,000 strike on a lot of the other exchanges out there. Well, that remains the case over there at CME as well. The most active contract this week is the DEIS par strike, the 100,000 call. That's the most active contract out there. So folks remain fixated. I don't care where they're trading. They remain fixated on that 100,000 strike out there. What are your thoughts on that? You think that's a little bit overdone? Is that not optimistic enough? Is that just the other leg of some vertical? Maybe the 50, 100 is a pretty wide vertical, but we've seen crazier things. Hit us up. Let us know your thoughts as we keep on rolling here. Tim, we got some questions for you. So stay tuned, sir. We got some questions about all things crypto and equities and everything else coming up for you in a little bit. But before we keep on rolling into those, we have some other areas lighting it up this week, including energy. So let's hang our hats out there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the energy segment, of course, a portion of the show. We break down what's moving and shaking out there in the energy complex. You guys can find this same report, go back out of the equities, get into the asset class again, and then scroll up a wee bit to energy. We're going to hang out in nat gas first. Nat gas, as you'll recall, listeners, has been a frequent offender on the show of late, and this week was no exception. It was number one to the dark side, off nearly 5.25%. That's on the heels of being number two in the other direction last week, up 13.75%. We have seen a lot of rocking and rolling in this space as a result of what's going on over there in Europe and their supply issues, and a lot of that spilling over into the U.S. Nat gas used to be a pretty siloed marketplace, and now these days with so much exporting going on, this U.S. market is now subject to some of the whims of the overseas nat gas market, and that makes things a little bit more volatile, maybe for a trader, a little bit more interesting. If you're a consumer of it, maybe not so much. So a little bit of a combo of column A and column B out there. Coming into showtime, nat gas on the week up nearly 2.25%. Up to about almost 5.75 out there. The most active contract is indeed the Nove contract. It has about 19 days to go. And that one, let's see, vol. We've been talking about the vol out there, and as you might imagine, it's moving quite a bit. So The vol is pretty rich, and it's in triple digits in that front contract, 104.6. That's up about 13.5 points from this time last week. So again, people who are looking for volatility, and maybe they don't like the levels in the equities for whatever reason, you could do worse than to at least keep an eye on the energy sector. Maybe you're not ready to dive into nat gas yet. Maybe you start with WTI and you progress to nat gas over time. But either way, there's some vol to be found in the energy complex these days. And in terms of skew out there, the puts last week, 8.6% cheap. This week, even cheaper, 10.8% cheap. No one wants the puts out there in nat gas this week. Last week, the calls, 9% rich. This week, 6.3% rich. So calls coming in a little bit, puts getting a little bit cheaper out there as we're seeing just interesting vacillation in the wings around an already rich triple-digit at-the-money vol level. So a lot to unpack out here in nat gas. By the way, you wonder how many contracts on the tape right now? Nearly 460,000. So another active week for nat gas. And in terms of the number one trade out here, the number one most active contract, I said we're at about 575 in that November contract. The 5 puts leading the dance this week with about 19,000 contracts. That's interesting. That's a pretty far out of the money puts at this point. Yet that is the number one trade, about 19,000 contracts going up out there. The most action actually coming today, about 7,500. The rest kind of scattered throughout the week. So a lot of opening paper earlier in the week. Obviously, we can't tell with today's paper what's going on from an opening or closing perspective, but still interesting track. You think that's interesting? The next most active contract, listeners, is out there in March of next year. Obviously, the tail end of winter. Maybe people thinking that crazy bid is going to come to an end because the 3.5 puts in March of next year, the number 2 most active contract, that one's been trading pretty steadily all week, right around 4,700 contracts a day, except for Monday, light volume on Monday. And pretty much most of those days have been closing. So maybe some folks getting the heck out of Dodge on that 3.5 strike. Maybe they're abandoning it, saying, you know what, that's perhaps a bit of a bridge too far to the downside. But it's been trading pretty steadily all week long there, right around 4,700 contracts every day, including today. So intriguing stuff on a put that is pretty far out of the money. Let's go see where that March future is still at 5.5. So it's pretty far out of the money for March out there. So intriguing stuff afoot. Let's go a little bit farther out, see if we see any other interesting and or aberrant prints here in nat gas. You're also seeing the 4 puts in March and the 5 calls in March, also pretty active all around similar levels to that. And since we're hanging out in energy, let's go really quickly back to also one of your favorites, number 5 to the upside this week. We're talking WTI, good old crude oil. OPEC making some comments that bolstered the crude bulls out there recently. So we're seeing a WTI getting a nice little lift, up about 3.65% since our last show, and pretty much that amount this week as well. So it's pretty much the number out there in WTI. Go to that same drop down, stay in energy, go up a notch there to WTI, listeners, and you'll find what we're talking about here. Coming into showtime, we're threatening an 80 handle, listeners, 78.65 in WTI. It doesn't seem like that long ago we were talking about, can WTI maintain a 40 handle? Will it break back down into the 30s? And now here it has pretty much doubled since those days, listeners. And for a long time, you remember, there was no love for the call skew. No one wanted the upside. It was all bidding puts. They thought it was going to be a lot more downside to go in the world of WTI. And then now these days, here we are. The options, or I should say the underlying, has pretty much doubled since then. Let's see what our skew is telling us out there this week. The most active contract is the monthly in November that has about 8 days to go. That did about 33% of the paper. Let's go a little bit farther out. Let's go to Dees, listeners. That has 40 days to go, and that did 28% of the paper. So still a pretty active contract. The vol out there is pretty much 35.25. So I said there's a little bit more vol to be found in energy these days. So if you are looking for some, it can be found not just in nat gas, but also in WTI. Obviously a lot less, about a third of the vol in WTI, but still much higher levels than we're seeing out there in the equities, for example. Skew-wise, last week the puts 3% bid. This week, 5.6% rich were the puts in the Dees WTI. Last week, the calls pretty much even with the at-the-money, about 1/3% bid. This week, nearly 3% cheap. So calls coming in a bit, puts getting bid up. Again, not entirely surprising there, given the fact that we're flirting with some pretty lofty levels out there in WTI right now. In terms of where the action was this week, if you said 80 calls pretty much anywhere, you were winner, chicken dinner. The 80 calls in December were number one out there. By the way, about 750,000 contracts going up in WTI this week. So a very active week out there in WTI. And the Dees 80 calls were leading that dance with 25,000 contracts. That's been a pretty active contract all week long. The big day was Tuesday with about 8,500. 6,000 on Monday, 5,000 on Wednesday, and about 5,000 going up today. Most of those days seem like they're biased towards closing. So some folks taking off the 80 strike as we threatened to get to there and maybe retreated off of it a little bit. So intriguing stuff there on the 80 strike. They also saw the 80s pretty active in November, doing about 23,000 contracts out there as well for number two. So pretty much the 80 strike across the board was where the action was this week, listeners. If we go beyond that, let's see. Number three was the 71 puts. That's strange. In November, doing about 16,000 contracts, a ton of them on Monday. 10,300 of those 71 puts went up on Monday. I'm looking to see if there's any reasonable spreads against that. I don't really see any other legs that make sense unless it's a 1x4 on Monday. So it seems like just 10,000 on Monday, 2,500 on Tuesday, 1,000 on Wednesday, 3,000 today. So a pretty active contract. But again, the big day was Monday. A ton of that, 10,300 going up. The 71 puts. That is an interesting strike and perhaps not what I expected out there. We can hang out in energy for a while, but Tim, let's squeeze in one more complex really quickly before we head on out to answer some listener questions. So I know you like to hang your hats most days, Tim, in equities and in crypto. But if there's one other complex you want to sink your teeth into on the show this week, what would it be, sir? Where should we go next?
Oh, wow. That was a good question. I don't know, Mark. I'm going to say dealer's choice. Dealer's choice.
Dealer's choice. You're punting back to me, are you? Well, it's not on our movers and shakers. A lot of our movers and shakers this week are things like oats and heating oil and Brent that don't do a ton of paper. But a lot of you have been inquiring lately about the metals, in particular, the shiny stuff, and in particular in silver. So maybe we'll hang our hats really quickly out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody. Asking you shall receive. A lot of you hitting us up about silver. Uncle Mike talking about it on the option block this week. It's one of his dear holdings out here. Coming into showtime here, a silver at about a 22.60 out there and up about 1/3% net on the week. So actually catching a little bit of a bid this week, but obviously the precious metals have not been faring well of late. That's come as a surprise to some people out there who've been picking them up of late, perhaps ahead of some weakness, but kind of underperforming to expectations out there of late. 22.60, like I said, on the week. The most active contract, by the way, if you're wondering, silver doing a little bit shy of 20,000 contracts, so lighter than, let's say, a Russell 2000 or even, the micro S&P. Of course, the micro is a micro contract, so adjust accordingly for the multiplier. But still, it's an active metal, but not quite as active as a lot of these other products we're talking about out there. In terms of where that action is lined up this week, about 30% almost exactly going up in the November contract that has about 19 days to go. So we're going to hang our hats out there. If you're wondering, what is silver vol right now? A little bit shy of 25, about 24 3/4, off about 1/4 point this week. So not a huge move from the vol perspective this week. In terms of skew, we did see a little bit of evolution out there. Puts last week, 4% bid to the at the money. This week, 6 1/4. So getting a little bit more of a bid to the puts. Is that showing maybe perhaps folks are concerned about continued decline in the metals? Let's keep looking and see if we can find out. The calls last week kind of unched about 0.5% cheap to the at the money. This week, they're about 1% cheap. So the calls have come in a little bit. Puts getting more bid. Intriguing. Not exactly what I expected. I thought it might be the other way around, given the fact that we had a little bit of a rally and maybe some folks would be prepping for a little bit of a rebound out there in the metals. But it seems like they are preparing for a bit of the opposite. Let's look at the flow and see if we can find anything intriguing out here. And it looks like the most active contract, we're at a 22.60, listeners. It was the 24 calls here in November, leading the dance out here this week. Trading pretty actively all week, mostly opening out there. So opening slight upside out there in November. But the fact that the calls came in, maybe they were overriding those calls, maybe wagering that we're not going to see a lot of weird upside. And we always know that if you go a little bit farther out in the metals, that's usually where we find some, shall we say, interesting paper. If we go on out to February of next year, we see the 40 calls printing yet again. We talked about some weird upside in silver when Russell was on the show a couple of weeks ago. And looks like we're seeing that again here. The 40 calls trading this week on Tuesday also saw the 30s and the 50s going up for less volume up there. So Tuesday was a weird day. Maybe a 30, 40, 50 fly. Looks like it's 1 by 2 by 1. So that could indeed be the case. What do you think about that one? 30, 40, 50 fly, 1 by 1, sell 2 by 1. Are you intrigued by that by February of next year? It's intriguing. Longer term flies, it's usually challenging to get the timing right on those, but we see a lot of those in the metals, so they must work. Someone keeps doing them out there in gold and indeed in silver. So long-term upside flies in the metals going up yet again, this time in silver. As we keep on rolling, it is time for you folks to join us here on the show with your questions. It is time for your futures options feedback.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the futures options feedback segment, the portion of the show where you folks take the reins, you ask us questions. Sometimes we turn the spotlight back on you like we did this week with our question of the week, which is still going. You can get out there to @options, make your voice heard. You got about 24 hours left to play, so you folks on the on-demand will have a chance to play as well. And our question of the week this week, Tim, I'd be curious to get your thoughts on this as well. We said there are many misperceptions about options floating around out there. However, some strategies seem to cause more problems than others. Quite simply, what is the most misunderstood options strategies? And we gave you 3 frequent offenders and also left you an opening to send in your own. A lot of you have. You sent in short puts, weirdly enough, verticals, box spreads, a few of you have sent in. So interesting suggestions. Keep those suggestions coming. We love to hear from you folks. And Mr. Tim, I'm curious, what are your thoughts if you have a vote in our poll? We gave them 3 choices, by the way, straddles and strangles, or time spreads, or butterflies, and then the 4th choice is other. So if you have a choice amongst those, have at it. And then more importantly, what do you think our audience is voting for in terms of the most misunderstood option strategy, sir?
Oh, it's always a good question. I think I'm going to go with butterflies. Just because I think it's more moving parts, and it kind of means different things to different people depending on how it's structured and what strikes and the size of the wing. So I'm going to go with butterflies. If I had to cast my vote.
A good guess. That's actually the reason we started putting this poll together, is because of some people's questions about butterflies. And then when we threw in time spreads, it seems like that. I like butterfly. I think that's a good vote. I could definitely see that one winning. Right now, it is time spreads, though, leading the dance, 44% for time spreads, followed by number 2, butterflies. So you're number 2 there, Tim, 32%. Number 3, straddles or strangles, 18%. And then 6% for other. Again, you guys have sent in some great ideas for others. If there's a strategy that perplexes you or you think people don't really understand, send it in. Let us know what you're thinking out there. We're always intrigued by that. As we keep on rolling out here to McMaster. Tim, he has the question I'm always asking you. This time, McMaster gets to ask it for you. He says, what do you think the volume threshold needs to be on the micro Bitcoin futures before we see some options listed? So, Tim, I could speculate, but you're the product guy over there at CME, so you can give us a more precise answer. What do you have to say here for McMaster? He wants to know what he should be looking for in terms of ballpark numbers before he can reasonably expect some options, sir.
Yeah, that's a good question. And should be told, there's no magic number that the future has to hit before we can introduce options on futures. It's really, when we look at it, is the contract mature enough in terms of consistency of volume, diversity of market participants, depth of book, kind of all these things we need before we overlay options. So no magic number. We also don't have any kind of concrete date we're waiting for. It's not a function that has to be 1 year old or 2 years old. There's really no binary look and feel. The strongest thing for when it makes sense is once the futures market has reached that point of maturation and can handle the associated delta hedging and deliveries of the options on futures, it really comes down to customer demand. And we're certainly getting a lot of questions from customers around options on micro Bitcoin. We certainly hear it It's not too dissimilar from some of the other factors that led to the micro futures introductions on E-mini or micro Bitcoin. Bitcoin today getting, retracing the 54, 55,000 level certainly makes it the BTC a healthy contract in terms of contract notional and capital usage. So we understand the needs. Continue to engage with the marketplace and see what makes the most sense. One of the other questions we'll have to answer, and certainly listeners reach out with your thoughts and feedback. If we were to move forward on something like micro Bitcoin options or options on micro Bitcoin futures at CME, is there room for both? Do we have BTC and MBT options? So we also don't want to cleave off any of the liquidity we're building in the BTC options that we were talking about before. So something we just have to work with market participants and make sure it makes sense for the marketplace.
Well, there you go. What was the name there? McMaster. I like that handle. McMaster out there. I know a lot of folks would be excited, Tim, to see the micros. I'm just putting it out there. We get that feedback a lot. So allow me to add that voice to the chorus out there.
No problem. Well, I got to save other product launches for future shows. I can't.
That's true. That's true.
We'll see what the future holds in store, but no, nothing in the plans just yet.
Because we don't let you on unless you have a cool product coming in with you. So you got to buy at your VIG to get past the bouncer at the door there. New products. So you got to save something for your next appearance. Interesting question here next from BKZ. They want to know, I've heard you say on the This Week in Futures Options program that you see more last minute buying in short-dated options in the futures options markets and in the equity options markets, where people are predominantly selling. Why do you think that is? Yeah, we have said that before, and I've said that myself a number of times on this show. It is interesting because, over the last couple of years, we've joked about the trend that, everything small is big again, but you can also wrap that into everything short-dated is excited. Look, they just added 2 more weekly contracts in the Russell 2000. So you folks out there can't get enough of near-dated weekly short duration contracts. And yet when we look over there, let's say on some of our equity options oriented show, we look at, let's say maybe the meme stocks are a bad example. People buy premium in those, but outside of those, you're looking at a lot of the weekly paper we're seeing out there. It's usually on the premium harvesting variety. And especially in the last few days of those contracts, you don't see a lot of people coming in and really buying them. But on the flip side, looking across the broad spectrum of all the near-dated contracts that we profile over there in CME, it could be energy, it could outside of the equities. Equities are kind of still their own beast, but outside of those, could be energy, could be metals, could be pick your complex. You can have near-dated weekly contracts going out in a day or two, and people will still be buying them on the futures option side. It's an interesting phenomenon and one that we have remarked upon before. I have my thoughts on this, but Tim, I'm curious for you. If do you agree with that perception out there? You think there is more willingness to buy nearer dated contracts across the futures option spectrum than there is, let's say, in the traditional option space? And if so, why do you think that is?
That's a good question. I think in addition to kind of your comments, Mark, which I agree with, I think it goes back to something I said earlier. Is I think there's a fundamental product characteristic of options on futures in the short dated, and that is if it's in the money, you're going to make or take delivery of the future itself. It's a seamless expiration event with respect to delta or exposure. So typically, if you think about the mentality of the buyer of options with a day or two to go or same day in expiration, you're probably playing that premium because maybe you think there's something to be had. So you're, with respect to further upside, or you don't mind holding that position. You're not trying to harvest some of those, just sell the premium and, hope it goes out of the money. You just keep your premium. If you have that buy mentality, I think you may also have an event horizon beyond just the immediate expiry, and you're open to taking the future to maintain that exposure. So that's the other thing I would ask people to think about is that seamless delta. Especially for equities, for example, on all the non-quarterlies, you'll take or make delivery of those futures that auto exercise in the money. And that might be a feature and a benefit for some folks, especially if they're deploying any type of strategies around the options as well.
Yeah, this is an interesting phenomenon. And I agree. I think there is a little bit of a different use case in the futures options. You have a lot of people, speculating in and around different levels of equities, using equity options to do so on the equity side. On the futures option side, you have a lot of other users wrapped in there as well. You have end users, producers of the commodity, they need to hedge and things. So they have a different use case, which would prompt them maybe to come in and let's say buy a WTI weekly, in the short dated time, maybe a day before OPEC is about to speak or something along those lines, because they have a need to hedge out there. So there is a lot more of those customers out there in the futures options side that have some sort of direct exposure to the commodity or the underlying itself, and they could have a different use case to need than just a lot of the speculative paper that we see floating around in a lot of these equities out there that are really just trying to premium harvest day after day after day out there. So I think that really does account for a lot of it, but it is fascinating to watch and something we have kept an eye on here on the show, BKZ. And I'm glad you brought it up because it's something we'll keep an eye on. It's an interesting trend out there in the world of futures options. Before we go, Tim, let's go out on this one. This is a fun one. This comes in from Mikhail. Mikhail, we got McMaster and Mikhail, so the Irish/Scottish contingent representing on the show this week. He says, I was just watching the Squid Game on Netflix and I thought of TWIFO. Oh, well, there you go. He says, there's a scene in that show where a figure is effectively exiled to the games because he used, quote, derivatives, in particular futures. How hilarious is that? I guess there are still some parts of the world where derivatives is still a bad word. I thought the same thing. Mikhail, I guess I'm late to the party. I'm the last person to watch this show, but I watched the first episode and a little bit of another one just last night. So I just happened to see the scene in question that you are referring to. You're right. And there is a guy who's a broker / money manager. And they say he took some client money and then he put it in derivatives and in particular futures options. And then, of course, that was the implication of that was, then once he did that, it was all gone. Because he was the bad guy, apparently. And then there's another scene later on where he does clarify. He said it wasn't just stocks, he says to someone else. He says it was futures. And it's kind of like it's like people are supposed to gasp at that line. And and then, of course, the main character is kind of an idiot, so he doesn't understand what he's talking about. So actually leads to a little bit of a back and forth on what futures are, which is kind of interesting. So, yes, I did see that scene, and it kind of made me both grimace and laugh at the same time. Tim, have you seen this rampant new hit on Netflix? And if so, are you familiar with how they treat futures in that dystopian world, sir?
I've heard, I haven't seen it yet. I've heard about it. And one of the things I've heard about it is, hyperbolic and over fictionalized. And obviously that would apply to their futures comments as well. So I'll have to check it out. And, I'll maybe on the next show, I'll have my retort for what I think is a mischaracterization for sure.
Yeah, it was a funny one. I definitely had to pause it for that one. I was like, did he just say what I think he said? So, yes. Yeah. He used the futures. Gasp. He's a terrible person. Send him to the games to be murdered. So, yeah, interesting stuff over there. The Korean perspective. I'm guessing he was slinging some Kospi maybe over there. Unfortunately, that music means it is time to draw this movable feast to a close. Mr. Tim, glad you could join us. We love when you come on to bring some awesome products with you. And before you go, we like to leave our audience wanting more. So if you have any hints, any teases you want to leave with our audience, now is the time, sir. And also if they have questions maybe about things they were asking today about thresholds for options or other things for the equity or crypto teams, where should they go? What should they do?
Yeah, and thanks again for having me. It's always fun. Enjoyed holding down both hot seats today. To talk about our Monday and Wednesday Russell options and all great things at CME. That's certainly only scratching the surface. So if you want to check out more things, I just tell folks, go to CMEgroup.com. Tremendous resource with respect to product information, tools, as well as all the educational resources the exchange puts out there. I'd really recommend people to check it out. It's one of my favorite resources to send people to because we can only scratch the surface in an hour about all the great things CME has to offer. So just encourage folks to go on their own journey and continue to learn about futures and options on futures at CME.
There you go. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. That'll get you to the reports that we used on this show. Of course, they're active and live and updated throughout the week. So keep checking those. If you want to check Fluid Milk at 2 a.m. on Sunday, we won't judge. Head on over, CMEgroup.com/TWIFO to begin your journey. And of course, you know where to go. We're just talking about the newest addition to the FTSE Russell options family. You know where to go to learn more about all that stuff. FTSE Russell, FTSE Russell.com is the place to go to kick the tires and light the fires. Give them a follow on the old Twitters while you're at it, at FTSE Russell, for all that information they put out there in between episodes of this show. On behalf of Tim, everybody over there in CME land, and everybody over there in FTSE Russell land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live. This concludes our broadcast day out here. But don't worry, we have more in store for you tomorrow. Coming back noon Central, 1 p.m. Eastern for Volatility Views. And then after that, for all of you in the Secret Club, 2 p.m. Central, 3 p.m. Eastern for Options Oddities. Then back again next week. It all kicks off on Monday with the option block all the way through to Thursday, another episode of This Week in Futures Options. We'll see you then.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. Listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.